Let us continue here. Okay, so the basics of the accounting, including, there are few important basic things which you need to aware. So from this important thing, real account. So the fundamentals of accounting, if you would like to know, because high level we have already discussed. So the accounts has been, classified into three types of accounts. In the accounting terminology, golden rules of, everybody will say golden rules of accounting. So you must have to aware of these rules, at least basic fundamental things. Okay, so the golden rules of accountings, I would say the golden rules of accounting is one of the most important concepts. Most important concept. So what are those? Number one is a real account. I'll explain again one by one. The second one is a personal account. Then third one is a nominal account. So everybody is saying that golden rules. Under the golden rules, these are the three accounts are there, but we must have to aware of this one by one. So let us discuss one by one. Number one is a the real account. So what is mean by real account? Why they are calling? Okay, so now, so the real account, let's say the closing balance. Now let us assume you have a yesterday closing balance. There was a 10,000 rupees in your bank account. The same balance which will be carry forwarded to the next day. If we are not going to utilize any amount from that balance. And also let's assume we have utilized some amount. Then whatever the whatever the closing balance which is available in that particular account, then it will be carry forwarded to the next day. So the accounts are usually involves assets and liabilities. So the real accounts are assets or liabilities. Okay, so let's say the closing, the accounts are involves assets, liabilities, and equity. So whatever the transactions which are happening, really the transactions which are happening. So the real account which is related to the assets, liabilities, and equity. If I would say the example as I have given the example, what is comes? Okay, debit means, okay, the simple thing is that the closing. Okay, so what is come? Okay, first I'll put it here is the debit is a, as we discussed, debit and credit both are the important things here. So what is the debit side which we are going to record? Okay, when the real account will come into picture. So now what is come in? What comes in? Okay, so now let's say now you are receiving, you have purchased, let's assume one vehicle, let's assume. Okay, So now whether it is incoming or not. Okay, so asset account will be debit. In case if it is a you made some payment, I mean the vendor account will be credit here. Okay, so then at the same time credit vendor and credit also we must have to aware that one what goes out. What goes out. So on behalf of that vehicle purchases, let us assume we are paying the amount to the sorry. We are paying amount to the vendors. Okay, so through the bank. Okay, so the real account which is related to the assets, liabilities, and equity. So which transactions are happening in between, and also debit means what we are receiving exactly. So what is going out, what is coming in, what is going out. Then the second one is a personal account. Personal account which is related to the so the personal account which is related to the persons. It is a general ledger account. General ledger account related to persons. As I mentioned, pure it is related to the persons where the transactions are happening. Okay. Persons are nothing but don't think only human beings are the persons. In SAP, in accounting terminology, the persons are even the factories, organizations, also the artificial persons. Okay, just to remember this one. Okay, whether individuals are artificial or artificial persons, like organizations, companies. I'll put it straightforward. Companies. Okay. So these the personal account which is related to the wherever transactions which are happening, the business transaction, either what kind of transaction, whatever it may be. Okay. So it will be in we are going to treat that as a personal account. So the personal account. So the personal account debit all expenses, okay, and losses credit all the incomes and gains. Okay, so now let's see the debit. What is going to debit? All expenses, and losses or losses. Then credit all incomes and gains. All incomes and gains. So debit means let's assume all expenses. Okay. So now let's say we are working in one organization. On behalf of that service, every monthly we are receiving salaries from the organization. So what will happen? So now salaries account will be debit, our bank account will be credited. So now the similar way, in case if we want to make the payment, okay, provisional entry. Okay, now today, every month 5th, I want to make payment. Then if I want to make the provisional entry during the month end. So for each and every person wise, which I want to give the name. Okay, let's say for the Viranjanelu. Okay, so let's assume. So his name is debiting. Then so expenses, either it could be expenses account or the person. Okay, so now here is the expenses salaries account will be debit and the bank account will be credit here. Okay, in case if the transaction which is already done, then credit means all incomes and gains. Okay, so now what we are receiving, so the so now whenever the incomes, so incomes are nothing but a, so which we are receiving so okay, so all incomes and gains, incomes are nothing but a, let's say we have performed sales, okay, sales activities. On behalf of that sales, which we are receiving amount from the customers. So, okay, what will happen here is the, let's say the particular person. Okay, so let's say I am receiving money from some XYZ person. Okay, now the organization will be debit, then customer will be credit. Okay, organization in the sense which we will not receive amount directly, then it will debit into our bank account. So bank account will be debit, then the customer will be credited. Okay, whatever we are receiving from the customers. So now this is the account is a personal account. Then the last one is a, okay, sorry. Personal account, but the debit is the receiver. Okay. Okay, this site written. Okay, 1 second. This is for, okay, so debit. Okay, fine. Okay, debit is the receiver. Sorry. The receiver is the debit. Credit is the, okay, sorry, I written the wrong. Up and down I have written. Okay, credit is the giver. Okay, sorry. So now, so debit, the personal account where it is going to representing that one. So let's assume, so now I mean, the person, the XYZ person, he is receiving money from the some other person. So now he is going to debit, means he is gaining. Who is gaining? The person is gaining, then credit is the giver. Some other person is losing the money. So from someone the money is going out, someone is receiving the amount. Okay, so let's take the example here in case if you want. So now, okay, sales. Sales on goods. Let's assume the accounting entry, how it is going to take place. So our bank account, cash or bank account, will be debit to let's say we are receiving amount from the customer. Okay, so customer is a person, is a, let's say the XYZ, his name is XYZ, let us assume. So now our bank account is debiting, so the receiver who is receiving, ultimately the bank account which we are having on the name of our organization, so the account is belongs to our organization. So meaning that we are debiting, then the customer is crediting here. Now let's say the last one is a nominal account. So the nominal account which is going to, the nominal account, the account in which all the transactions, which all the accounting transactions The accounting transactions are recorded. Transactions are recorded for an accounting year. Accounting year by transferring balances to transferring balances to permanent accounts. Permanent accounts at the end of the accounting year. End of the year. So now here, what is the example? Okay, what is the example here? So the account in which all the accounting transactions are recorded for accounting year by transferring balances, permanent accounts and the end of the accounting year. Okay, let's say now rent. Okay, so now let us assume reset the ban. Okay, so now let's assume the accounts are related to the gains and losses. Okay, so the accounts which are related to the gains and losses. Okay, debit all. Okay, all expenses and losses will be, all expenses and losses will be debit, and credit means all incomes and gains. Okay, so expenses means now the expenses which we are incurring in order to run my business organization. I have to incur a number of expenses like administration expenses, maintenance expenses, office painting, cleaning, water supply. So there are different kind of expenses. So in the P&L account, all expenses will be showing as a debit side, even losses also, which will show as a debit. Then credit side. So the credit side, all incomes and gains. Okay, all incomes and gains, which is related to the all incomes and gains also, which is related to the P&L account, but where we are going to show the credit side. What are the incomes which we have received for this particular financial year? Then at the same time, what are the gains which we have performed for this financial accounting year? So this is the one important thing here. So these are the fundamental things here. Real account, which is related to the liabilities and equities. Personal account, which is related to the persons, where the transactions which are happening in between both the parties. Then nominal account. So the nominal account, which is related to the accounting transactions. So which are recorded, okay, transferring balances to the permanent accounts. So the expenses account and as well as incomes. So these are the basic fundamental things which we must have to aware of this one. So I think you need to aware few glance here, few accounting glance. Glance here. Let's assume assets. So assets are nothing but a this. Sorry. In simple terminology, whatever the assets which the organization is having, or else even if it is related to the person. Let's say Viranjanailu. Okay, let's assume. Okay, he is having computer and also he is having let's assume mobile. So he is having a car, he is having a house, he is having some bank balance. Let's assume. So now all these are related to the assets. Assets are Again, assets are divided into the two things. One is a tangible assets, intangible assets. Again, that is a different topic, but at least we should aware of this one. What is mean by assets? So assets means, so assets which are having, okay, the assets will be recorded in the financial statements. The financial statements, the assets will be recorded in the financial statement as part of balance sheet. So the assets are the part of balance sheet. How the balance sheet will be looks like? Let me just give the high level information here. So how the balance sheet will be, just giving that high level information. That's it. How it will be, balance sheet will be looks like. So now let's assume the balance sheet will be looks like. So debit side is assets, credit side will be, here is the debit side, always the assets will be represented. Then credit side will be the liabilities. So now let's say the assets, okay, which I am having is a assets is a plant. Okay, let's say the car. So the what is the cost of that one? 50,000, 5 lakhs. So now which I am having is a buildings. So now let's say 10 millions. So now let's say the liability which I have a some loans, bank loans. Let us assume which I am having is 15 millions. So like this, the debit and the credit balances which will show. This is what we are going to call it as assets. So now at the same time, liabilities, assets and liabilities. The liabilities, the liabilities will be recorded in the financials, the financial statements as part of balance sheet. At credit side, I'll put it this one, at credit side. So assets also will be recorded in the balance sheet at debit side. So now you can see here, this is a just example. What I have given here is the just to understand that one, the debit and credit. So all my assets will be part of my debit side. All will be liabilities will be part of credit side. So assets and liabilities will be part of my balance sheet here. We must have to aware of this one. Now, okay. So now assets and liabilities we have seen. Okay, remember always the assets, liabilities will be recorded in the right side of the balance sheet. Debits means assets will be recorded in the credit side. Okay, as I have, even the assets you can include furniture, fixtures, plant and machinery. If you have anything, that one also you can include. Then now expenses. Okay, so expenses of the, so now the fundamental thing here is that in accounting, each and every business transactions should be recorded as a dual control. So means it's a one is a debit, one line item is a debit, one line item is a credit. So while recording the business transaction, we must have to record each and every business transaction with 2 lines. Remember. Okay. So now assets and liabilities we have seen. Let us see the revenues, expenses and revenues, expenses. The expenses will be recorded in profit and loss account, at debit side. Okay. So how the expenses? So now the expenses, all my expenses. Then what are the expenses? If I would say the office administration expenses. So any kind of expenses. Expenses means any kind of expenses. I just give an example. Administration expenses, some cleaning expenses, some bank charges. So there are there are different types of expenses which we must have to record into our books of accounts. So now this will be the part of my profit and loss account. The expenses and the liabilities will be part of, expenses and revenues will be part of profit and loss account. Okay, how the profit and loss account will be looks like? Okay, this is the balance sheet. Balance sheet. Okay. And let me copy this one. So now this will be the profit and loss account. So what people will say, profit and loss account, people will say always P&L account. Don't confuse that one. P&L account. Okay, don't confuse. Then here my debit side, always the debit side will be the expenses. Expenses will be recorded. The credit side will be revenues. So the expenses will be like say even salaries also. Salaries, then rent, the monthly rent which I am paying. Okay, that is also the expenses, administration expenses. So now here is the sales. Most of the cases sales will be sales as a revenues. So profit and loss account. Okay, so which is even tax paid. Okay, all that is also expenses. Even depreciation also will be part of my P&L account. So there are n number of things which we need to record. But what is mean by the, I mean, where we are going to recording the expenses and the revenues. Expenses and revenues. Okay. Revenues. This one. So the revenues. The revenues will be recorded in the profit and loss account at credit side. At credit side. This is the very, very important one. Okay, so now we have seen the assets and liabilities, then expenses and revenues, where we need to record the business transactions. Okay, again, there are a number of internal, internal management related. So a number of other things need to be prepared, like a cash flow statement, even cash flow statement, what is the cash coming in, what is cash going out. Okay, based on the bank accounts, which we need to prepare the cash flow statement, cash inflow, cash outflow. Okay, so there are different kind of reports are there, but those does not require here. But at least we should aware what is the asset, what is the liability, what is the revenue, what is the expenditure here. Okay, so for you people, is it clear the what I have explained here? Hello,
Yes, sir.
Viru, what about you?